In this video, I want to focus on the cash book and the accounts payable. I want to use this tool to demonstrate the difference between cash accounting and accrual accounting. The reason I want to do this is that most of what the public sector in Nigeria knows about is cash accounting. Even though Nigeria transited from cash accounting to IPSAS accrual in 2016, up till today, 90% of public sectors are still operating on cash basis. So I want to use this video to explain the difference between the two and how to successfully manage your transaction under the accrual accounting system with ExpressBook PSA. Before I do that, let me just show you something I forgot. If you click the right mouse on the desktop, you see that a context sensitive menu comes up. One of the things you can do is to change the background color of your system using this menu. So the background color you see is not fixed. You can always change it to whatever you want it to be. Still go back to my preferred color. Okay, let me just take this. So let's look at cash book. You see, one of the things about national chart of account is that it is structured in such a way that there is no entry for your cash account, that is bank account. The account you have within the individual bank as an MDA is not listed in the national chart of account. So what do? So what we have done with ExpressBook PSA is to provide you with a tool that enables you to create a sub-ledger for each of the bank account you have or cash account you operate, and then link this account to the control account in the national chart of account. So we call this cash control account. So one of the things is that you give details of your bank or cash account, but the mandatory thing is that the GL code here comes from the national chart of account. So each account you create here must be linked to the national chart of account. So while your sub-ledger will keep the details of your cash transaction, the summary goes into the general ledger via the national chart of account you selected. So you must do this for all your bank and cash accounts before you start operating the cash module. So this is a typical setup for an MDA. So once you have done that, you can now come to cash receipt. You see, you receive cash from different sources. Cash can come from the revenue allocation account. It can come from direct cash sales. It can also come from another bank to another bank. So in each case, you have the source where the money is coming from. So the source can be a bank account. The destination can be another bank account. The source can also be a revenue account, like direct allocation. But whatever the source is, the destination will always be a bank account. So let's say we carry out this transaction. This is fact direct allocation to FIRE. So I come here, I enter the amount, let's say 450 million or 4.5 million, and I type I type here fact allocation. One of the thing I must indicate is the fund. I will take the department and then I must indicate the fund. Let's say this is a service-wide vote, and then I'll click add. Oh, sorry, I have to enter the reference number. So let's say we call this RVOH FAC, and I click add. As you know, if you make a mistake, you don't enter what the system wants, it will prompt you. So that's what it's keep telling me. So I will now say add. So when I say add, I will now say check. I will say commit. So this transaction has been posted. That's the receipt. I can come here and print the voucher. This is a voucher for this receipt I've just received. So it shows you where the money comes from, the debit and the credit. So you can print this and file as your receipt voucher in the file. All right. So that's what cash receipt is all about. So receipt source can be bank, it can be revenue item, but the destination will always be bank. This is purely cash transaction. So then payment can be from where? Always payment come from source is always bank. The source of the payment, where the money is coming, that's the account that will be credited. And where does it go? It can go to another bank, or it can go to direct purchase. Please, this is a purchase that is paid for in cash. So let's say you are making the purchase for stationery. Or let's say just local transport. Transport. Okay, local transport. Maybe you're paying here, the amount is to 500, 5,000. So the money is coming from a bank account and is paid for this. You see, when you select bank account, what you select here is account code, that is bank code. It will bring out the GL code, that is the economic code in the national chart of account, which was assigned to it. So again, you select your department, you select your fund, yeah, you select the fund, then you put the PV number, number is always there on the form. So you click add, click check, you click, you must specify the beneficiary. Okay, beneficiary is a mandatory. Who is this? Okay, I can take from the list of beneficiary already in the system. If not, I can type in the beneficiary here. So I can now say commit. Yes, that transaction is done. So I can come here and print the voucher. This is the payment voucher. You see, we can customize this further, but we make it simple. We can customize it further based on the whatever the MDA may require. See, what I want you to understand here is that you can also do your bank reconciliation, but we're not going to that. What I want you to understand here is this. The cash transaction is purely cash. It's purely cash. So you walk into somewhere, you purchase something, that is cash. Somebody comes in, pay for something, that is cash. But that is different from a situation whereby you buy something on credit. Somebody supplies something to you on credit. What you are recognizing in cash book is you are recognizing cash, you are recognizing expense or revenue immediately as cash is passed on. But accrual accounting says that you recognize expense when it is incurred, not when it is paid for. So that is where vendors payable comes in. Because when a vendor supplies something to you, a transaction has taken place. So that transaction results in an entry that says credit the vendor and debit the expense. So that is complete, pending when the payment is made. When the payment is made, you will now call up that invoice. With that invoice, you will credit cash and debit the vendor for the payment you've made. And that clears the transaction. That is the accrual. So you don't do that kind of transaction in cash book, because you can't even do it, because in the first place, cash book is only when cash change hands. And when you are making payment for that vendor, you don't go to cash book. With Express, we don't go to cash book module. So let us just take one step and see how we can accomplish this. First, you must classify your vendor if that is a policy in your MDA. Some people have class A vendor, class B, class C. You must do that. Now, the next thing is each vendor must be registered. Again, you don't have specific vendors in the National Chart of Accounts. So it's also creating a subledger for accounts payable. And in this subledger, each vendor has an entry with a control account in the National Chart of Accounts. And the vendor is identified by his registration number. So you do that for each of the vendor before it gets to the point where the vendor can now be paid. So when a vendor supply goods, what you do is to raise invoice. So here, let's take for instance, this is the vendor. And what he has done is this vendor is environmental services. Let's say that is what it is. So you come here, select a service, and then next thing is account. So I don't know most of the accounts. So what I do is I use this button here to go to here, and then let me see what I can see under environmental service. Let me say cleaning. Okay, I have cleaning and fumigation here, so I take it. So quantity 1, unit price, let's say this is 50,000 or 500,000. And then, is this amount inclusive of VAT? If it is inclusive of VAT, you say yes, but assume it is not inclusive of VAT. So here you come, you have value added tax, you select if applicable 7.5. Now withholding tax, you select, this is 5%. Stamp duty, you select, remember we have already set up those accounts. I show you when we're doing control parameters. So we've already done that. So the next thing is your reference number. This is a purchase invoice PIV, whatever number it is, you put it there. So what other thing? I guess that's all. You click add. If there's anything that's okay, you click add. Then you click check. So this is what we have done. We have registered the invoice because this vendor has supplied the good. He has done the job. We are owing him. But we must recognize that expense the moment it occurs. So here we click commit. It's done. So let's see the voucher under print here. And click this voucher and say print. So this is what the voucher looks like. All the accounts that are involved in that transaction. Remember, you have overhead account, expense, you have the vendor, you have VAT, you have withholding tax, you have stamp duty, all are here. So at the end of the day, you see that debit and credit equals to 0. All the debit and credit are listed here in this voucher. So what is next? This vendor is being owed. So let's say a month later or later on there is money available is to pay this vendor. So you come to purchase payment. You must know the vendor that you use. So this is the vendor. Call up the vendor. You click here, the vendor invoice is there. So you call it up. And when you call it up, it will fill all the necessary parameters. What you need to do is, where are you paying from? Which bank account are you using to pay it? So you select the bank account. So if it is part payment you're paying, you can click here. Remember, the vendor was the transaction was for 500,000. Now what is showing here is 470. That is after all the tax have been deducted. You see, you don't need to do anything with the withholding tax, VAT and all that. The system does them automatically for you. So with this, everything is set for you to go. So you just click add. You say, okay, you must select fund. Okay, that's it. So you must select fund. You must also select the department. So you click add. You have not specified the check number. Okay, I don't want to. So I click OK because it could have been. You must specify a valid account for stamp duty. Okay, so the stamp duty account, and then so they are all there. So you see, the essence of this is I don't use this software on daily basis. So if I don't have those checks in place to tell me when I do something wrong, it will be a disaster. So this is why you need an automated system with error check to enable you to correct you when you do something wrong. So I click check. Yes, it checked the double entry is complete. So I click commit. So this vendor has been fully paid. So if you were to come back and pick this vendor again, it shows 0 balance. So let's see what the voucher, let's see. Yeah, this is the payment. So you can click the payment voucher and you see that everything has been taken care of. So now, what I'm trying to demonstrate here is that anything that has to do with purchase on credit, you do it under accounts payable. It's different from cash transaction. So the confusion now has been that people would buy on credit, the invoice is there in the system. When the time comes to pay, they will still go and use cash book instead of picking the invoice that is attached to that payment. So when you now come and use cash book to pay, you do the payment, what happens is that invoice will be hanging. It will be there showing as if that is in the sub ledger. In the sub ledger, the invoice will show as if it is not paid. Because what you are doing here does not only involve the general ledger, it involves the accounts receivable sub ledger, which contain the details of the invoice. So this is a very important thing that we take time to explain when we are doing training, because here you will need to, this is where you will need to restructure your documentation, because MDA is virtually made to so it's on cash basis. So we have a lot of things here to explain during training, but basically this is what happens. As I said at the beginning of this presentation, this is not a training program. It is a presentation. So I'm not going to go too much into details. when the time for training comes, after you acquire the software, everything you need will be explained to you. Moreover, the system comes with a complete detailed user's guide. If you right click here and you see that user's guide is one of the things you can access from here. Sorry, user's guide, yeah, it's one of the things you can access from here. I just open my, yeah, so the user's guide is quite up to date and complete. It shows you all the things we have discussed and more to enable you to use the system effectively. So the user's guide is there. And then as I said, we'll stop here. If there is any question, we would like to receive them and get you send a feedback to you. A lot of things out here to learn, but this is a presentation. We don't want to keep the time running. So thank you for your patience. Thank you for your, we hope for your patronage, and then we look forward to doing business with you. But you can trust ExpressBook. We're here to provide the service and to expand and enlarge and support you within the years ahead. So we look forward to doing business with you. Thank you.